Joe Foster offers products and services using the following business names: Foster Financial Group, Insurance and Financial Services; Ameritas Investment Company, LLC, AIC; Member, FINRA, SIPC, Securities and Investments; and Ameritas Advisory Services, LLC, AAS, Investment Advisory Services. AIC and AAS are not affiliated with Foster Financial Group, Proclaim Cuba, or any other entity or organization referenced herein. Information provided herein is educational in nature and should not be considered specific investment advice. All investments and investment strategies involve risk, including loss of principal. Discussions regarding investment performance or planning scenarios should not be considered as indicative of the experience of all clients or a guarantee of future results. Tax laws are complex and subject to change. Information provided herein is based on the understanding of existing tax law and should not be considered tax or legal advice. Please consult with your tax advisor or attorney regarding your situation. Our guest today is Joe Foster, and he has graciously agreed to provide his expertise to you. Joe is a certified financial planner and the president of Foster Financial Group in Dallas, Texas. Joe works with successful individuals and families to protect their legacies and strategize their charitable planning in order to redirect tax dollars to the causes that they care about. So welcome, Joe. We're really glad to have you today.
Thank you, Andrew. Thank you. I'm so glad to be here. I had the huge privilege and joy of going on a trip to Cuba with Proclaim Cuba and some folks from Watermark, and just such a blessing. And I still has such an impact on me, and just love Proclaim Cuba and what God's doing through you guys. And I'm in the investment business. We're in the wealth management business, but I really do fully understand that the best investment someone can make is to invest in things of eternity, and storing up treasures in heaven is by far the best investment you can make. So that's where my heart is personally, and that's something that we love to help people with. We get the joy of working with so many great people who are just so generous, and just getting to experience the further joy of generosity.
Fantastic. Yeah, we're grateful to be connected to you, Joe. You know, I've been in this role in Proclaim Cuba for about a year and a half now. I'm the director of development, and it's been amazing to see how God has blessed us with connections to ministry partners, church partners, business partners, individual partners like yourself. You know, because we're talking about giving, I never want to miss an opportunity to thank our donors and for their generosity. So thank you to people who donate to us, who are in our audience. Thank you for helping us to continue to do the work that God has given us to do in Cuba. Joe, you're one of those people, so I thank you as well. You know, I say generosity because it's not really the amount that people give or even a strategy that they use to give more. It really is, as you talked about, Joe, it's really the heart behind it. It's what God cares about. We know this is important to God, that our heart is in the right place as we give. And I say all that to say that we're going to be talking about giving and tax saving tools. And I want to acknowledge that some people and some of the examples that we use in the stories, they might not seem, or they may seem a little unrelated to where you are in your financial life. So we're not going to try to elevate anyone or exclude anyone, but some of those tools will be more applicable if you have some financial assets or you've reached a retirement age. So, and all that to say that we'll start with listing what are giving options, and then we'll take a look at each one of those. So, and that's why we have Joe here today, because he's gonna help us walk through some of these things. So we have standard giving, which would just be check, cash, online with a debit or credit card. We've got donor-directed funds. Talk a little bit about that. We'll do stock and real estate donations. We've got retirement giving, like required minimum distributions and qualified charitable distributions. Those are great ones. We're really excited about those types of things because those can really help you with some tax savings. And then legacy gifts. So all of those things are related to giving and how you can have different strategies for each one of those. Joe's got some great stories for some of those things. So
yeah, that was well said, Andrew. And we just it was just a fun situation in late 2022. We got referred to some business owners. He and his wife sold their company for $16 million, and they're looking at over a $3 million tax bill as a result of that sale. And because they were super generous and because we were actually able to use some other strategies non-related to the donor directed funds, they were able to knock that tax bill down to about $1 million. So $2 million in tax savings. And they put $1 million into a donor directed fund, and that money is available to be deployed immediately, although they can take their time on some of it. And so, and then we also help them with a strategy where they put another $1 million in a charitable pooled trust, and they'll probably wait for a while, but in the future, they'll be able to get retirement income from that charitable pooled trust for as long as they live. And when they both pass away, the balance will then go to their favorite charities, their favorite ministries. So just a combination of strategies along with a non-charitable strategy, literally knocking their tax bill from $3 million down to about $1 million. And so, like we like to say, they diverted substantial money, substantial tax dollars to kingdom dollars. And the donor advised fund or the donor directed fund was a significant part of that strategy. And again, that's $1 million that's available to be deployed, hopefully as soon as possible.
That's a phenomenal amount of money. Good issues to have there.
Great people, great folks, man, super generous folks.
Yeah, and like I said, really, it's the heart behind those things that are really important, and I love the fact that they're doing something like that. So, okay, and then a trust too. That's something I didn't mention. Those can be a little more complex, and I know people could contact you directly about something like that if they'd like to do that, right?
Exactly, and that's what's neat is you can still get a significant tax deduction even when you're able to derive significant benefits from it for you and your family. And so just you can get really creative with this stuff, and it's very tried and true. But why not save the taxes and benefit your family along the way if you can?
Yeah, that's I like that. Yeah, because why not do it if those things are available to you? So, okay, well, let's move on to some other advantageous strategies that people can use. They don't need to have a large business or assets like we just talked about in order to donate, but they obviously still want to take advantage of any kind of charitable giving and tax savings that they have when they're doing that, right? So, so another next one on our list would have been stocks and mutual funds, and that can even get into the retirement side. So let's start down that road.
Yeah, just another couple of simple ways you can do it that many of you may already be aware of, but it's always great to be reminded and take that next step if it's beneficial to you to implement it. But gifting appreciated stock or appreciated mutual funds helps you save the capital gains taxes on those gifts. And so let's just say hypothetically you inherited a lot of Exxon stock from your grandparents a long time ago. And let's just say you wanted to make a gift of $25,000 to Proclaim Cuba or a combination of ministries. And let's just say that particular $25,000 portion had a cost basis of $5,000 because, again, you inherited a long time ago and the Exxon stock is appreciated a lot. Well, if instead of writing a check for $25,000, by gifting the $25,000 worth of Exxon stock, you're going to avoid the capital gains tax on $20,000 in my example. So depending on your tax bracket, let's just say you save 20% of $20,000. Well, gosh, that's another $4,000 that you can now use to, you and your family can enjoy it. You can give it to your grandkids. You can give it even more to ministry. But and then if you love Exxon stock and you really want to hold on to more Exxon stock, you can then turn around and take the $25,000 that you are going to write a check to ministry. You can write it to your investment account and still buy $25,000 worth of Exxon stock. So there's really no downside. The minute, you still get the $25,000 tax deduction. The ministry is a nonprofit. They still get $25,000 worth of stock that they can turn around and sell immediately. So they still essentially get the same benefit. And so again, it's just another easy way to, just take some tax savings, take advantage of some tax savings if you're not already doing that. If you're short on cash, sometimes I found myself short on cash, to be candid. And so you're like, well, okay, I've got this investment account. I can go ahead and just transfer some of that over, and that's just another way to do it. So much of our, so much of most people's net worth is not necessarily sitting in their checking account. So it's just and then another great strategy that you alluded to that you may be familiar with if you're retired, or if you have parents or grandparents who are retired, is the qualified charitable distribution strategy. And for people who are over age 70 and a half, and that number's increasing as the IRS makes changes. But at the end of the day, for people who are having to now take distributions from their IRAs, their required minimum distributions, one strategy they may consider would be to redirect those dollars to the extent they don't need those distributions. You can redirect that. And so for married couples who are in their 70s filing jointly, the standard deduction amount is about $29,000. So you really don't get any tax benefit for your itemized deductions for your charitable contributions until you exceed the $29,000. So rather than take your required minimum distribution, pay income taxes on it, and then turn around and donate it and maybe not get any tax benefit, what you can do is you can redirect those required minimum distributions directly to your favorite ministries like Proclaim Cuba. And then that way, that income never shows up on your tax return.
I wanted to touch on the fact on stock and even real estate. We're bringing on a partner to help us with those kinds of transactions, because sometimes those can get a little tricky. I know you also work with this same company that we're bringing on called Waterstone, and we're really looking forward to be able to offer that to folks who do have those stock options primarily, but then also if there might be a real estate transaction somewhere along the road.
Yeah, they do a great job.
Okay.
They do it very efficiently. They're very knowledgeable, and they do it very affordably.
Yeah, that was one of the things we were really keyed in on, is that they seem to offer a really great service at a very affordable cost, because obviously we want as many dollars as possible going towards the ministry that has been built over the last 32 years, and we're grateful to be a part of. So, all right. Well, how about legacy gifts? What do we think about those? And how
that's a great topic. That's a great topic, and there are a lot of ways to do legacy gifts. One thing that we're trying to help friends do more of is really taking a hard look at doing that, number one, and then number two, doing it in the most tax efficient manner possible. So back to IRAs, under the new rules that a lot of people aren't even aware of yet, once both spouses are gone, when their family inherits an IRA, they have to take that money out within 10 years. And in the past, you could stretch that out over your adult children could stretch those IRAs out over their life expectancy. Well, now the IRS wants their pound of flesh as soon as possible, and so they have to take those distributions out within 10 years. And so one thing we're recommending is consider giving a part of your IRA as a legacy gift, and that way there's no tax on it. You can leave other assets that may get a step up in tax basis and leave a portion of your IRA to ministry, so that way that portion of funds, your family doesn't have to pay taxes on it. They don't have to worry about having it distributed over 10 years. And then you can leave some other things. But there are some other great ways. Life insurance is a great legacy gift. All sorts of ways to do that in your estate planning. And we won't get into a ton on that today, but just it's something to really focus on. Lord, what would you have me give even after we're both gone? And would you have me give part of what you've blessed us with, even after we're gone, to really store up more treasure in heaven, more eternal rewards in heaven, literally. And so just legacy gifts can be another great way to do it. We can also help with calculating, do you have enough? And then are you going to be able to leave enough to your children and grandchildren? But then considering the legacy gifts, and with estate tax estate tax is probably going up after 2025. There's a high probability of that. And so if you happen to be having an estate that is taxable, you sure don't want to leave 40% of your estate above those state exemption amounts to the IRS. You'd probably rather leave them somewhere else. And we can help you with planning on how do you get more of that to your family, your favorite ministries. And so legacy giving is just another area it's really worthwhile to focus a little bit on that. There's a resource we used to subscribe to, especially when the estate tax exemption amounts were lower, and they're about to get lower again. But just there's a resource called Estates of Famous People, and you can read, because it's typically public knowledge. If you don't set up trust, you can read about famous people and what happened with their estates. People like Elvis Presley and J.P. Morgan and all these famous people, and in a lot of cases, over 50% of their estates went to taxes mainly, and some to probate costs, and lawyers and CPAs and financial advisors. Nothing wrong with all that, but just at the end of the day, it's well worth giving, and even giving mostly during your life, but even after you're in heaven, you can still store up and treasure.
Great. That's wonderful. I wanted to mention our website at proclaimcuba.org, and we have a giving menu, and under there is one called Ways to Give. So we'll actually post those recommendations that you gave us on there. So we'll continue to build that site out so that can be a resource for our listeners to be able to go and find some of those things. So what else would you recommend that people do as they begin to look at their financial life and how they can be good stewards of what God's given them? These would be some of those calls to action. Now, what would you recommend that people do?
Well, it sounds maybe corny or whatever, but pray about it. Just say, Lord, what would you have us do? And
absolutely,
and just schedule. Just pick up the phone or send an email to your financial advisor, and just sit down with them and they probably already understand your heart for generosity, but just really sit down with them and really start doing more planning, especially if they're kingdom minded. You want to do that. And then we'd love to help you. If you want to call us or email us, you can email me, joe@ffgnetwork.com. That's joe@ffgnetwork.com. Our website, www.fosterfinancialgroup.com. So your existing financial advisor, if you have accounts directly at Fidelity does a phenomenal job on helping with this. Your own advisor, again, please let us help you. And really, Andrew is very knowledgeable in this area. He would downplay this, but you could start with him, and he would just help you navigate through some things, and then he could even direct you to what may be the most appropriate resources for you. So there are tons of resources, and most of these resources come at no cost or no obligation. And if we can serve you in any way, that's a huge win for us, because that's something just very near and dear to our hearts, and how we really do want to serve the Lord and serve people in this area.
We are blessed to have people who donate not just financial resources, but their time, their talent, and their testimony. And Joe, you're one of those people. So we are truly grateful for you, for your time, for your service to others, to help them in their financial walk, because it's important. It's important on how we relate to money.
Yeah. Thank you.
Yeah, we know there are, I think, over 800 passages in the Bible about finances. And so how we relate to those things is very important. And generosity is really a key element of all of that. So appreciate you talking about that in that context, very much so, of the things that have been granted to us and the things that we're able to share with other people. Joe Foster offers products and services using the following business names: Foster Financial Group, Insurance and Financial Services, Ameritas Investment Company, LLC, AIC, Member, FINRA, SIPC, Securities and Investments, and Ameritas Advisory Services, LLC, AAS, Investment Advisory Services. AIC and AAS are not affiliated with Foster Financial Group, Proclaim Cuba, or any other entity or organization referenced herein. Information provided herein is educational in nature and should not be considered specific investment advice. All investments and investment strategies involve risk, including loss of principal. Discussions regarding investment performance or planning scenarios should not be considered as indicative of the experience of all clients or a guarantee of future results. Tax laws are complex and subject to change. Information provided herein is based on the understanding of existing tax law and should not be considered tax or legal advice. Please consult with your tax advisor or attorney regarding your situation.